So in this video, we'll be showing you clips from 5 different videos from our pre-scene analysis pack. And the first clip is from the pre-scene analysis series. It's vital that you fully analyze your pre-scene, and this requires a detailed examination of the case study, ensuring that every section is fully understood. So our pre-scene analysis video provides a page-by-page analysis of every section of the pre-scene, and it ensures you don't miss anything important, and it helps you to build a comprehensive understanding of the material. And this is vital if you're going to gain high marks in the exam. So in this clip, we've taken a section from our pre-scene analysis video series.
In this next video, we're going to be taking a look at Cewmlator as a company. So specifically this time looking at the organization rather than looking at the general electric car industry or the introduction to the pre-scene as a whole. And as we look through this section, as we look at the organization itself, we need to be looking for several key things. We need to be looking at how the organization operates, to look for any potential risks in how they operate or any supply chain issues that we can foresee, or how the supply chain is set up and what kind of problems could be with that, or how do they make sure it runs smoothly. We also need to think about the history, the background of the organization as well, because that can influence the culture, that can influence the vision of the organization, and therefore affect decisions on a daily basis. We also need to think about how the organization operates as a whole in terms of how it sells its vehicles and any kind of process around that. And also what separates the vehicles. How does Cewmlator actually achieve its competitive advantage? How has it got to the point where it is the third largest electric vehicle producer in the world, as we saw in the previous video? What is it about Cewmlator Cewmlator cars, that people buy? What is their competitive advantage? So there's quite a lot to get through, and we're going to actually split this into 2 different videos. So we'll have the first Cewmlator video, which is looking at the history of the organization. It's looking at the models that the car produces and its supply chain. We'll then have another video 4, where we're looking at the mission, vision and values of the company, and how its board is comprised, the governance, the executive directors, the non-executive directors, the committees, etc. And we'll also have this sustainability report, which is at the moment buried in between the financial statements of both Cewmlator and Atom, and we'll have that in the 4th video. So let's take a look at Cewmlator. And we can see that it was established in 1952, so it's almost 75 years old. So, of course, it has not existed since then to produce electronic vehicles. It was a manufacturer of internal combustion engine vehicles. So it has history of producing internal combustion engines. So that can always potentially, when we think some things strategically, always potentially be an option. It has a long established history of internal combustion engines. Now, it may not want to take that backward step, but earlier when we were speaking about how there is definitely an increase, 150/200% increase in growth in the last 5 years of hybrids and plug-in hybrids that require at least some form of combustion engine. That's still a potential option for us because we have experience, we have expertise in the past of producing these sorts of vehicles. We can also factor in that because the organization has been around for so long, so it's been around for over 70 or almost 75 years. It's been on the stock exchange for over 50 years as well. So it's a very, very long-standing company. And with that comes prestige and heritage. It's not some risky startup. It's a company that's been around, that is a household name, has been around for 75 years. And that makes it, thinking about our stakeholders, we're thinking about funding and etc., that it makes it a very secure investment potentially for institutional shareholders who incidentally also become quite important stakeholders. So that's another thing for us to consider when we're building our Mendelow's matrix. Those institutional shareholders that the organization is likely to have is going to be an important stakeholder. And the company is always focused on mid-market cars that are attractive to drivers. So in this instance, what it's essentially meaning is middle of the road in terms of pricing. It's not a budget line, but it's not a very expensive car. And it needs to be attractive, it needs to be a driver's car. It needs to feel fun, sporty, etc. to drive, whilst offering value for money. So this is where we're starting to see the competitive advantage. We're starting to see the critical success factors of the organization, what its cars need to be. So when you are proposing any new project or anything, any new models or anything in your exam, you need to be thinking about these attributes, because this is what Cewmlator cars are known for. This is why they have been successful. And we shouldn't be diverging from these attributes. So for example, we've got here mid-market, attractive to drivers, value for money, innovative, enjoyable, ensuring safety. So a high safety standard, enjoyable to drive, good value for money, and innovative. So always trying to be at the forefront of any kind of new technological development or advancement, and ensuring that our cars have very good value for money in terms of the amount of technology that's in them versus the price. Because that's very important as well, because we have to be careful of overdevelopment. This is often why you have cars that have lots of different trims. It's why you have cars that have different models with different standards. There's no point in spending thousands and thousands of pounds or dollars putting very, very expensive electronics and navigation systems in a budget car that someone is going to use to drive to the shops and back once a week, because they're not going to be willing to pay extra to have all of that, because they know they don't need all of it. So making sure that we develop to the right level, but we maintain our competitive advantage, making sure we have in our cars, in our vehicles, what has made Cewmlator cars successful, and not diverging from that. So in short, these are things we should be making sure we are not moving away from in any future development. Moving away from good value, moving away from being innovative, moving away from excitement, moving away from safety standards. These are what people have come to expect from a Cewmlator car, and why we have been successful. So really, really important to keep those in mind with anything that you are suggesting, anything that you're talking about in your exam. So that's a key tip there. So when you're thinking about your suitability, acceptability, feasibility, one of the best models often used to structure answers and to analyze them, this is what makes something suitable, is if it is contributing to value, to innovation, to excitement, to safety. If you're about to suggest that we make a really poor value for money car which doesn't innovate, which is very bland and meets poor safety standards, then that is completely the opposite of what a Cewmlator car should be about. Likewise, if you are about to suggest that we make a budget line, there might be some value in that, but it might be that we make a budget line under a different branding, because Cewmlator cars are seen as mid-market cars. You might ruin your reputation amongst your existing clientele if you start making budget cars and Cewmlator starts to be seen as a less prestigious brand. Likewise, if you start making premium cars, you might struggle to sell them, because people might think, well, I don't really want to spend that much money on a Cewmlator. You think of the real world and you think of cars like Mercedes, BMW, Audi, etc. Those would be your more higher market cars, at least in the sort of standard cars before you get into your Porsches and your Ferraris, etc. And so if you start pricing a equivalent Ford or Honda at those sort of prices, you're going to struggle to sell them, because if you could afford that, you would just get a Mercedes or a BMW. So it's also important to make sure that you're pricing for your market. And this is also why there's been a squeeze on the mid-market, because more budget cars like Kia, etc., have been producing better quality cars. Your BMWs and Mercedes, etc., have been building the A-classes, 1 Series, etc., and sort of moving down into the middle market, and it's squeezing the middle market. But it's often why companies, they create new brands when they want to try and attract more premium or more budget clients. So a classic example of that is Lexus. Lexus is Toyota. It's a fancy version of Toyota. Or companies do this through acquisition. So the Volkswagen Group, you have the Seat, which is their more budget line, the Volkswagen, which is the standard, and the Audi, which is the higher line. Now, a lot of these cars share exactly the same makeup. You strip down a Seat Leon, you strip down a VW Golf or an Audi A3, and it's mostly the same car. It's just the trim on it, so to speak, and the badge on it that makes it the car that it is. So that's all very important for maintaining who our market is, maintaining who our clients are, and how we can continue to meet the requirements and the preferences of our customers. And the company is one of the first manufacturers to really establish electric vehicles in the 21st century. It started in 2012 and had a range of 219 kilometers. And it established its market niche primarily consisting of customers who wish to drive sustainable vehicles which do not require fossil fuels. So on our critical success factors, particularly given that they have now phased out ICE cars, we can add sustainability and environmental friendly, as this is what has allowed us to establish this market niche in the electric vehicle market. It must have been successful because we then a few years later decided to completely phase out our ICE cars and replace them with battery electronic vehicles that are designed to be the best in their respective classes in terms of range, performance, and value. So again, that's key term there, value. Performance, that could link to excitement, link to innovation as well. Value, again, and the range as well, that is also tied with value, it's tied with innovation, it's tied with performance.
Next up, we've got a clip from our strategic analysis. It's extremely important that you have the ability to identify how the pre-scene relates to key models and theory, and the examiners will expect students to demonstrate a good understanding of the models and theories and make the appropriate links to the case study during the exam. It can be hard to fully analyze a company using models you've only recently learned and be confident that you've got it right. So our strategic analysis has done that hard work for you. So in this clip, we're going to take a look at our strategic analysis video.
And we'll start by looking at the mission for the organization. So by mission, we are looking at why does Cewmlator exist? Why do we have this organization of Cewmlator? What is it ultimately trying to achieve? And what is its mission? And does it have a mission? And how important is its mission? And how valid is its mission? Because that, as we put on the screen here, is what links everyone. It's why investors want to invest, other than the financial rewards, of course. It's why employees want to work for your organization. It's why designers want to design cars. It's why people want to purchase your cars. It's the common purpose that you are ultimately moving towards. And a good mission for the company should define its purpose, why we exist, why Cewmlator exists, who do we exist for, and what do we want to achieve. And if we look at the mission statements from the pre-scene, we can see that Cewmlator's mission is to make the world a better place by providing desirable and sustainable vehicles. So that's why we ultimately exist. It's to make the world a better place. We exist to make the world a better place for everyone. or we can infer for everyone. It doesn't actually specifically say who we want to make the world a better place for, hoping that it's not, we want to make the world a better place for our shareholders. We want to make a better world for everyone. We then need to define the strategy. So how is our organization competing? The range of businesses that we are operating within. Well, of course, we know that at present, the sole area of business, the sole industry that Cewmlator exists in is sustainable motor vehicles. And at the moment, only produces those battery electric vehicles. But what is worth noting is that it says to be the leading manufacturer, if we look at the vision, of sustainable motor vehicles. The mission, by providing desirable and sustainable motor vehicles. It doesn't say battery-powered electric vehicles at this point. It just says sustainable motor vehicles. So anything like a hybrid would also be considered a more sustainable vehicle. And those of you that watch the pre-sim videos did see that I started to suggest that maybe they should be looking at hybrid vehicles because of the demand for those, because they also reduce some of the emissions and carbon problems and recycle and sustainability problems that come with lithium batteries. If you use a hybrid vehicle, you reduce the number of batteries, therefore they are somewhat more sustainable. And of course, the offset to that is that you need to have a combustion engine, which might defeat the object of moving towards electric vehicles in the first place if you've still got to have combustion engines. But they are far smaller than purely combustion engine cars, and they have lower emissions, so they are more sustainable. Then have to have your values. What does Cewmlator value? And Cewmlator values being innovative, it values being sustainable, it values high quality, and it values providing for its customers. To pay attention, it says specifically in the values, to pay attention to the needs and desires of customers. So essentially to be reactive, to be responsive to the needs of customers. When customer preferences change, we change as well. But we're always providing innovative, sustainable, high-quality products. Now, that may somewhat conflict at times with the mid-market approach that we are taking, because if we're trying to produce the best, high-quality, most innovative, sometimes that is going to be expensive to produce, and that might be more associated with the premium models. But if our name is associated with mid-market models, premium customers aren't necessarily going to be interested. But the point is that we, when producing our cars, so our existing cars, but any new cars, any new models, any new services or products, any new revenue streams we try to pursue, etc., needs to meet those values. It needs to be innovative, it needs to be sustainable, it needs to be high quality, it needs to be what the customer actually wants, because that's driving our reason for existing. And so when you are in your exam answering questions, you need to bring those points up. And also, we need to ensure that we have effective policies in place. And this is for people who are in some way connected to the organization, whether that's employees, the board, our dealerships, our suppliers, etc. How do we ensure everyone connected with our organization lives and breathes our mission, vision, and values? And that's going to be a recurring theme, because one thing that was prevalent throughout the pre-sim was this idea of sustainability, but there was no mention of its suppliers and its buyers. Yes, there was a lot of talk about how we are going to be more sustainable, but you're using lithium mining companies as a supplier. How sustainable are those? Lithium mining is infamous for not necessarily being sustainable or good for the environment. How do you make sure you are working with the lithium provider that is as clean as possible? How do you make sure that your dealerships are effective and that your dealerships are innovative and providing high quality in their dealership service and their aftercare service? That's also very important for us as an organization if we want to achieve that goal. We can't just look at ourselves because we sit in the middle of quite a long and complex supply chain. So we have to make sure we are working with partners that align with our values. And once we have defined those values, which we've got them in the pre-scene there, it's things like high quality, it's things like sustainability, etc. How do we actually ensure we are making progress towards them. It's all well and good saying we want to be sustainable, and then 5 years' time, at the next time we refresh the strategy. Well, we wanted to be sustainable. Do we still want to be sustainable? Yes, we still want to be sustainable. Okay, well then we'll have our next 5-year strategy is to continue to be sustainable. Well, how are you proving that you are sustainable? How are you proving that you are making progress? And this is where your balanced scorecard often comes in, because it's a really great way of appraising performance across the organization, about setting key performance indicators, KPIs as you may know them as, to ensure that we are making progress. And it also provides a spectrum across the company, so you're not just focusing on the numbers, or you're not just focusing on production or anything like that. And you are also setting some key targets. So this is what I would always say with the balanced scorecard is you generally don't want to list out 100 financial perspectives, 100 learning perspectives, internal, etc. Because if you try to improve 400 variables, you'll end up not improving any. So it's best to keep these to a short list of targets, maybe 5, 6 at most for each of them, and work on those. Because the problem is it can lead to a lack of focus if you're not focusing on a few key things. So how might we apply the balanced scorecard to a company like Cewmlator? Well, of course, with the financial perspective, that's generally one of the easiest ones, and regardless of the company, it's usually a fairly similar thing, because ultimately you are looking at the financials, you are looking at the statistics, you are looking at how much money we are generating, you are looking at our profitability, have we managed to control our costs? Revenue going up by 10% is no good if costs go up by 20%, because that means our profits are then actually reduced. When also we need to be able to see how much return both we are getting from money that we've reinvested in research and development, but also what our shareholders are getting. We can't be spending lots of money on projects that are not providing a decent return. Yet, through it all, we need to make sure that our cash flow on a month-by-month basis is effective, because we've got working capital requirements, we've got suppliers to pay, we've got employees to pay their salaries to. We can't afford to, say, make a loss for 11 months straight and then make a huge amount of profit in the 12th month, and overall the year then is profitable, and then we can pay our staff, because of course we have to pay our staff every single month. So that's important to be aware of, and to have budgeting for negative cash flow. Also, an important perspective for this company in particular is the cost of batteries. The pre-scene said that it was going to decrease over time. There was going to be 37.5% decrease in the average cost of the battery production in the next 5 years, which of course is something that we need to monitor as well, because that is one of our biggest costs. And the more effectively and more cheaply that we can produce our batteries, and the cost of our batteries goes down, then that's going to affect our production cost. That's mean we're going to potentially able to then pass that saving on to the consumer, or at least improve our profit margin. We've then got the learning perspective, often known as the growth perspective. So for this company, things like the number of new markets we enter, the amount that we spend on research and development, and the success of those research and development projects, more importantly, as well as the amount we innovate and the amount we spend on training for our staff, developing our products, etc., is going to be very important for us as well. Then have our internal, and this is to do with basically our production ultimately, and things that go on internal to the organization. So the environmental impact of our production. We know that in the sustainability report, it looked at our wastage, it looked at our energy usage, and keeping an eye on that and monitoring those. Also, just how effective we are with regards to creating cars to budget. And the number of supply chain incidents is an important perspective as well. The amount of times that we can't get lithium from our suppliers, the amount of times our dealer doesn't pick up their, or isn't available to pick up their orders, those sorts of things. Also, the retention of our employees, particularly in our quality control, etc., as that is so important. It's particularly important for this industry because the way in which the electric cars are produced means that if you have a defect, particularly in something like the batteries, the car itself is almost a dud, because, of course, the battery is very important for it, but it's not like with an internal combustion engine where you can take the engine out, take some parts, fiddle with it, put it back in, and it works. The batteries are built into in a sense, the floor of the vehicle. There's no way of extracting the batteries without basically scrapping the vehicle. So really, really important there. And so defect rates is to be a huge target for us as well. We want to reduce that defect rate to a zero as much as possible because of the sheer cost of it, not just in the production, but after production as well. We, Cewmlator, offer a 160,000 or 8-year warranty on the batteries. If the battery usage or the battery power, maximum charge, etc., degrades by 20% over that 8-year or 160,000 mile range, we have to replace the battery for free, which can cost $20,000. That's a huge expense. So again, making sure it's in our best interest from a financial perspective, also from a reputational perspective and a cost perspective, to ensure that we have high quality production. And our customers as well, that goes back to the battery life as well. We also said in our values that we need to be responsive to consumers' needs. So satisfaction of them, the number of customers we have, the customer retention, how many dealerships buy from us and then buy from us again, or how many dealerships say, well, actually, I was just useless. I couldn't ship the Cewmlator cars and Cewmlator were awful when I tried to get in touch with them. That's not going to be good from our customer perspective. So quite a few key metrics there. And if we can focus on building each of those, then as an organization, we're really going to grow. We're really going to improve. We're going to be a more profitable company that can invest more in research, that can then reduce its defect rates and have more satisfied customers and a larger market share. So that's how it all fits together.
We're casting the net a little bit wider now with a look at the wider industry in which the Pre-Seen company operates with our industry analysis video. It is critical to demonstrate to the examiner that you have fully understood the Pre-Seen industry as a key element to gaining extra high marks in your case study exam. Researching the industry can be a laborious process, especially when you're not sure which information is useful and which isn't. And our team has spent hours doing this research for you, finding the information that will help you to achieve a wider perspective of the industry and build a deeper knowledge in preparation for your exam. So in this next clip, we'll be taking a look at our industry analysis video.
Let's get straight into it with chapter 2, which is our introduction to the electric vehicle industry. And first, we're going to have a think about some history. So picture this. You're crossing the road and out of nowhere, a silent, sleek, futuristic looking car sneaks up on you and makes you drop your coffee in surprise because you have to jump out the way. Now, this is something that 10 years ago would have been a real rarity, a real shock. However, in recent years, electric vehicles have really grown into a kind of key part of the car industry. They're changing not only how we drive, but also reshaping energy demand and urban planning, and even how governments are thinking about the future of transport. So we're looking at an industry, as we'll get into later, that has really, really grown in the last few years and is fast becoming a key part of the automotive industry. And I wanted to start this off thinking about the history and thinking about, picking out the kind of what I think is the most interesting part about the history of electric vehicles. And that is the fact that the idea of an electric car is not new. And not only is it not new, it's actually very old. So in the 1890s, electric vehicles were popular in the US and in parts of Europe, and they made up a whole third of all vehicles. Now, admittedly, there weren't very many automotives back then, but still, a third. That is not some small experiment, that is a key part of the market. And people liked them because they were cleaner, quieter, and easier to drive than petrol cars. Now, all of these things are true today. So why is it that petrol took off after the 1890s and electric vehicles didn't? Well, there were two advantages. Firstly, range, and this is still a problem today as well. Early electric vehicles could barely make it 50 kilometers before they needed a long recharge. And we're talking a lot longer than what we have today with the Tesla super fast chargers. And also there is refilling. So a tank of petrol could be topped up in minutes, whereas charging an EV, as we said, was a long old wait at best. And this really, the final nail in the coffin was the electric starter for petrol cars, which really just meant that there was no practical edge for EVs. Back in the day, you used to have to crank up your petrol engine to get it started, but when they got rid of that, no need for EVs to exist in the 1890s and early 1900s. And by the 1920s, we can really see electric cars kind of drop off the map. They still hang around with some things, so like trams, milk floats, and forklifts, they've been electric basically since then. But in terms of cars, there is a long gap between when they were first introduced and when they started taking off in popularity and when they kind of got picked back up. But let's have a think about where we are today. So we've gone past the reboot I just discussed in the 2000s, and we've got to the point where electric vehicles are not only, kind of fairly popular, they are becoming a huge part of the market. So we can see in 2024, over 17 million electric vehicles were sold across the world, and that made up 25% of all new car sales. We're looking at a huge market, $670 billion. And also we can see that costs are falling each year, average battery pack prices, bit of a tongue twister, are declining, which is making them cheaper and increasing their ranges. And essentially what we can see is there's a real trend towards electric vehicles. I'm not going to come here and predict that, petrol is over, but we're really looking at a sharp increase in electric vehicles. And in some countries, it's 80% of all new cars. There's obviously a big range with some a lot less, but still, we're looking at a really fast growing market. And the message here is clear. Policy support, infrastructure investment, and consumer confidence really shape success. What didn't work out in the 1890s and at the start of the 20th century, now, because of other changes, has really started to take off. Now, let's have a think about the industry life cycle. And this is the first section that I'm going to really leave you to mostly read all on your own. What I want to talk about here is the maturity phase, which is where we are now. Because some aspects of the industry are starting to show maturity. The conversation is not really about whether EVs will work, but it's how to make them cheaper, how to make them work even better, because they currently are working. And also, how to make them longer lasting in terms of charge, in terms of durability, and more sustainable. And this is something that is going to pop up over and over again, all the way throughout this industry pack, and most likely in your exam. And now the industry is not without its problems too. So we can talk about charging infrastructure, still patchy. Supply chains, especially for materials like lithium, are being really strained. And also there's this big issue of the recycling of used batteries, which again, we're going to come back to later. But overall, I think we can still safely say there is very little sign of any sort of decline on the horizon. Global demand is only going up. Regulation is increasingly supportive because governments see it as a way to support clean energy and clean transport, and the technology is improving year on year. Now, the risk here is consolidation. We've got too many manufacturers potentially chasing the same amount of customers in a very competitive market. And so success is going to depend on combining profitability with leadership in technology and sustainability. But I think we can say if things continue as they are, the electric vehicle industry is likely to dominate new car sales well before the middle of the century, well before 2050. Things are only going up. Now, let's apply that to the pre-scene. Let's apply that to Cewmlator. So we can say that the development of Cewmlator reflects the wider life cycle of the EV industry. So, like the industry itself, the company first had an experimental phase when it introduced its first electric model in 2012. And this is when the market was still in its very early stages, with limited uptake and high skepticism. But in 2020, when Cewmlator committed fully to battery electric vehicles, they positioned themselves squarely in the growth phase of the industry. Now, this was quite a bold shift, but it allowed it to focus all of its resources on electric technology instead of splitting its attention across petrol, hybrid, and electric. And it seems like the strategy has paid off in the home market. We can see from the pre-scene that Cewmlator has a 15.4% share of the Duxland EV revenues, and it sits just behind Atom and Dilson. So it is very much a key player in the home market of Duxland, and you can also see that even whilst it is behind these two other companies, the race is very close. So let's move on to products now, what these electric vehicle manufacturers are actually offering in the wider world. And I'm just going to focus on 2 of them. As I'll keep saying in this video, there are plenty more for you to look at, but I'm just going to pick out the 2 really important ones. And of course, first off, we have to look at battery electric vehicles, or BEVs. Now, BEVs are powered entirely by a battery and an electric motor, so you could think of them as the real deal, the fully electric car. There is no petrol engine involved here. That means there are 0 tailpipe emissions, there is smooth driving, and the joy of never having to visit a petrol station again. Now, listen, anyone who's tried to use a charger on the motorway might have their own opinion about what's better out of petrol and charging, but yes, no more petrol stations. Now, they come in all shapes and sizes. There are tiny little city cars, there are supercars, and there are even kind of big SUVs and big trucks coming out, if you think of the Tesla Cybertruck, for example. The main challenges here are the challenges that are common to every single electric vehicle, and that is range and charging. And we've spoken about those already back in the 1890s. However, with battery technology improving every year and charging networks expanding, BEVs are moving from the niche to mainstream at a really fast speed. And I think anyone who's been outside in the last 5 years will probably have noticed that. As I mentioned at the start, what once would have been a really rare occurrence to see one of these sleek, fancy electric cars is now increasingly normal. They seem to be everywhere. Now, the other one I wanted to talk about here, because it's the other kind of main one that you'll see out and about on the roads and that really is taking off too, are plug-in hybrid vehicles, PHEVs. Now, these are considered, in theory, the best of both worlds. They've got a battery you can plug in and charge, but they also have a petrol engine for when the electricity runs out. So, the range issue becomes more minor. You can get the best of both, as I've said. Now, typically, we're looking at 30 to 60 kilometers of electric driving, which is enough for a school run or a commute. Then, when you want to take a longer trip, let's say, out to the countryside, the petrol engine will kick in, and so you will not be left stranded on the side of the motorway. Now, they sound pretty perfect, don't they? It sounds great. We've solved it. No problem. We're using the best parts of both technologies. However, there is a small catch, and that is that most drivers often forget to actually plug them in. Used properly, yeah, they're great. They're going to save fuel and they're going to cut emissions. But used lazily, they are just petrol cars that carry around an unused battery, making them really heavy and really fuel inefficient. So yeah, you really have to be on top of it. Okay, so that is going to bring us to the end of our short section here, but as you can see, there are plenty more products for you to have a look at. Let's move on to research and development, and the point I want to pick out here is about recycling and second life, because one of the big challenges currently is what to do with the millions of EV batteries, once they wear out. We're seeing a huge growth in electric vehicles in sales and people using them, but that also means a huge growth in worn-out batteries. Now, research and development is looking into efficient recycling techniques that look to recover some of the scarce materials that go into the batteries. Because we've got things like cobalt, we've got things like nickel. These things are not easy to just pull out of the ground. So it is going to be really important for us to figure out a way to recycle them effectively and reuse them. At the same time, many firms are investing in second life applications, so turning EV batteries into large-scale energy storage systems that can balance renewable power on national grids or provide backup electricity for homes and businesses. And this is going to be my first shout out of the industry examples section. There is a really good story on this in the industry examples. We're not going to get to cover it, but I strongly urge you to have a look yourself in your own time. Okay, let's move down to the application to the pre-scene here. And what we can say here is that Cewmlator's product line mirrors the broader EV market. It covers multiple customer segments. Now, more on customers to come very shortly. But it's got 4 models you'll see in the pre-scene. The Tiny, the Trap, the Twistix, and the Scorch. Slightly difficult ones to pronounce. Not sure they'd do too well marketing-wise, but no worries there. They range from a compact city car, as we discussed, to a high-performance sports model, which gives the company a reach across all budgets, family, and premium buyers. And yeah, there's also 3 different trim levels for the customer to choose to really kind of get the most customization possible. And if we move on down to research and development, the point I wanted to pick out here is this bit here. So the pre-scene doesn't go into detail on specific research projects, but we can probably safely assume that because of the company's scale and its established presence, there is probably a potential for investment like in things like modular vehicle platforms and, most importantly, battery recycling. These priorities are the general research and development priorities of the industry, and so it's safe to say that Cewmlator are probably doing the same. And if they're not, they really, really should be.
The next clip is taken from one of our most popular videos, the Top 10 Issues. The Top 10 Issues video identifies the 10 most likely issues to appear in the exam based on our expertise and experience in this area. And our expert gives guidance on how to deal with the issues in your answers, provides advice on which models to use, and key points that you should raise. Based on our experience of analysing CIMA case studies for over 10 years, our predictions have been extremely accurate in previous exams, with around 70 to 80% of topics in the real exams being covered in our top 10 lists. So take a look now at this clip from our top 10 issues video.
So with the introduction out of the way, let's kick off with our top 10 most likely unseen issues. And the first one we're going to talk about here is ethics. Now, the reason why we've chosen ethics as a top 10 issues is because it is one of, if not the most commonly examined strategic case study topic. It appears all the time. 40% of variants that have ever been produced for the strategic case study exam have had an ethics question. And CIMA seem to be testing people on ethics. It's one of their key things. It's why they have this whole CIMA ethical code of conduct. It's because the reason why you've been learning about it from certificate level, from operational level, from management level, onto strategic level, it appears every single level. And there's focus in the pre-scene. There's talking about the risks of sustainability in the risk reports, stakeholders, the community, the sustainability report, the values of us, the vision, mission about being creating a better world for everyone. So whilst it didn't use the word ethics literally, we can infer a lot of focus from it in the pre-scene. And of course, just the fact that ethics always appears in strategic case study exams. And likely issues of this could be around community impact, particularly around suppliers. That was a big thing in the sustainability report about we think about the community and we work on helping the community, but no mention of actually how we do that. And safety for that community as well. Lithium mining is one of the biggest impacts on developing communities. It poisons water supplies, it destroys the landscape, etc. It creates fumes, it's toxic chemicals. There's a lot that could go wrong here. And so we talk a lot about how we are good for the environment, but there's no mention about how we actually check that our suppliers are acting ethically. And so that could be a big thing. And particularly something given that our values, our mission, our reputation, we've staked it on being this for the environment, working to produce a better world for everyone organization. Yet there's not really too much mention of it. But I still bring up ethics just because there are certain issues in the pre-scene that could tie to an ethics question. And of course, ethics is just always coming up as well. And CIMA wants us to be highly ethical. And they always expect you, this is a really important point here, to take the moral high grounds. We know in reality, ethics can be quite grey. There are sorts of things we have to weigh up with costs and all these sorts of things. But in the CIMA exam, you almost want to think of it as quite a black and white thing. You almost want to look at it as we have to make sure everything we do is completely ethical or it is not ethical. And often make us a recommendation as well, but make a recommendation that is both a short-term and long-term benefit. So there's a very generic example here said, let's say someone is injured on in the factories. So a quality control engineer is injured by one of the automated machines in the factories for the scorch or the trap or whatever it may be. So of course you don't want to do that. You don't want that to happen. We're an ethical company. We respect all our stakeholders, etc. So we change the safety procedure to stop that specific incident from happening again. But what was the underlying cause of that? It wasn't just because of that very, very specific safety policy over that specific area or specific machine. There was perhaps a lack of training. There was a lack of development. Maybe the machines themselves aren't necessarily safe as they could be. So you long-term think about how you are going to stop the same sorts of issues from ever arising again in the future. And again, that's how you portray yourself as a senior manager, how you portray yourself as an ethically responsible person. And so, of course, key principles to bring up here would be CIMA's ethical principles. You've got your integrity, confidentiality, professional competence, due care, professional behavior, objectivity. And the examiner themselves, who ultimately decides on the variance, they decide on the pre-scene, they decide on the mark schemes, etc., has specifically said you can pretty much always use this model when answering ethical questions. So a really big, important piece of information there, exam tip for you preparing for the exam. But just as a caveat to that, when you talk about ethics, you can, yes, introduce the CIMA ethical principles, which are integrity, confidentiality, blah, blah, blah. But that is as much as you should really be talking about when you're talking about the theory itself. If it's an integrity issue or a confidentiality issue, build your answer around it being a confidentiality issue or around it being an integrity issue. Please don't spend half an hour and hundreds and hundreds of words explaining in theoretical textbook detail what integrity is, what confidentiality is, what objectivity and professional competence and due care are, because that is not going to be a question. They're not going to specifically ask you to do that. So once you've brought up the model, just focus on the principle that is most at stake in the question and make sure you're actually answering the question that has been asked, because of course that is incredibly important. We've also just got here the American Accounting Association resolution model. Now, this, of course, isn't in the CIMA syllabus. It's an American model for starters, but it can be useful to help structure your answers if you're answering a question on ethics. So you can start by establishing whether or not we owe a duty of care. We can establish the consequences. We can also establish our commitments to integrity and fairness and cultural norms and legal regulations, etc. A great phrase, just as another key tip here, great phrase to throw in there, if you can, is ethics is simply the right thing to do. Good ethics, running an organization, running a project, running whatever it might be, with good ethics is simply the right thing to do. So some key information there for you when you are writing answers about ethics in your exam. Now on to issue number 9, and this is funding. Again, this is one of these things that does generally always appear. It's often not its own topic, so you often won't get questions specifically about debt funding or equity funding or any kind of funding or M&M theory and that sort of thing. But it is nevertheless examined regularly, and it's usually formed as part of other questions. In fact, I could almost guarantee that you will need to talk about funding in your exam, because any kind of question regarding dealing with a situation or an investment or a new project or a new model is going to require you to discuss how you're going to fund that investment. And cash is going to be needed for large investment projects. We know that. We know this is an innovative company. We know there are lots of opportunities for growth and development in this industry. And on top of everything, it's specifically mentioned as part of your role in CIMA's SCS guide. CIMA provides a preamble which explains the role that you are playing and what you are expected to do. And one of those is to source and to recommend suitable sources of finance for funding for projects. So again, you are going to get a question about funding in some way, shape or form in your exam. And this could be for a huge long-term funding requirement, developing a new model of car. It could be for expanding operations, opening a new factory, for acquiring a competitor or acquiring a supplier or buyer through vertical integration. And it could also be for working capital requirements. It's short-term funding options for our working capital to pay off our trade payables and liabilities, etc., to plan for negative cash flow while we invest in something, or while there is some sort of issue, while there is a supplier issue, while we cannot produce any new cars because of an issue in our supply chain, for example. So tiding us over through that supply chain issue is in itself a potential funding question. And one thing that's also really good about funding questions is they're always a nice, easy opportunity to bring up some key points from the pre-scene, to demonstrate to the examiner that you've read and understood the pre-scene, that you are referencing contextual information from the pre-scene in your answers. So, for example, we can look at the statement of financial position and see that Cewmlator had $3.7 billion in the bank. So you might say, well, you've got a lot of that to be able to invest in projects. But then also, remember, we've got working capital requirements, and that negative cash flows must be planned for. That's a risk. Cash flow risk. And also our trade payables. We look at the statement of financial position, our trade payables are $2.8 billion. That's a lot of money. A lot of that is going to fall due in the next trading year. So we can't just say that we've got $3.7 billion to invest. And CIMA will know that. If you say that, they will look at it and think, well, you don't really have good business acumen if you assume that all of that money is just money that is available to invest. So always bring up those points to demonstrate that you have that business acumen, that you are understanding the context. The debt funding is reasonably high / medium, 41.07 or 69.69%. Depending on which method you use, whether you're using long-term debt over equity, long-term debt over long-term debt plus equity, etc. So that may make it slightly harder to raise additional debt just off that gearing rate, but also bring in some more points. We have decent tangible assets, $27.5 billion in assets that could be used as security to raise debt. Although remember that a lot of that is going to be our property, plant and equipment, so we can't just set it aside as security. We have to ensure that we can still use it as an asset, even if it is security for that debt. But also we've got reasonable interest cover. We can pay off our interest, our finance cost 5.81 times over with our operating profit. And just another point there on the trade payables, that we did have a reasonably high current ratio. So think about current ratio as ultimately how many times over we can pay off our current liabilities with our current assets. But remember that when we use the quick ratio, so when we deduct our inventory, the cars that we have ready to sell, etc., that drops to 1.84%. So we do have a lot of our assets tied up in our inventory. And relevant theory here could be looking at the differences between debt and equity funding. If for a large project, do we go to the market? Of course, it's quite expensive and time-consuming to raise finance that way, but dividends are actually optional. We've got quite low interest, quite low dividend rate at the moment. We're only paying 13% out, whereas, of course, debt and debt funding and interest rates, finance costs, we do have to pay that back. We have no option. And you can also look at your lenders, look at your equity providers as well in terms of where they sit on Mendelow's matrix and the difference that makes and how that affects how we deal with them, how we work with them.
Our final clip is from our mini mock debrief video. We produce a range of mock exams for each sitting, and alongside each of those mocks is a video debrief. And in these debrief videos, our experienced tutor analyzes every question and takes you through a step-by-step guide on the best way to approach them. And by watching debrief videos, you'll learn to understand how to pick out all of the key information in the task and the requirements. You'll use that information to build an effective plan. Many students fail due to poor answer planning. And then that will help you to formulate an excellent answer. So in our sample video, tutor will take you through question of the mini mock.
And this time we've got a slightly different style of question. Again, it says 30-minute question, but it is 100% one task. So in your actual exam, you won't get a question that is just one subtask, but this is more to represent the amount of content you would write for perhaps a more 50-60% question in the actual exam. So it's more of a full-size subtask from the main mocks or from the actual exam in this mini mock. And this is a question about, again, if we look at the requirement line first, to assess the extent to which net present value is an appropriate tool for assessing this project. Please include a discussion of the risks and drawbacks in your response. And again, you can see this is a full-size question, so we need more along the lines of 16 marks worth of content. And what we can also note from this particular question is there is a lot of comments in the reference material. So what I mean by that is the actual real bulk of the content that we need to analyze is actually in the reference material. It's not just for one key point or anything like that. The body of this question is actually contained in the reference material. So again, we put this in to demonstrate the importance of the reference material, the importance of analyzing and assessing the reference material. So let's take a look. It says that it was great to hear your contributions on that project. As part of putting this together, we need to make sure that everyone understands the value of the net present value. Because of course, that is one of the key factors. That's one of the reasons why we are going ahead with this project, because it provides that $780 million in additional wealth to the shareholders. But the finance director here is suggesting that this might be limited. This may not be an appropriate way for us to analyze it. And one of the non-execs on the board has expressed some concerns, an email that's forwarded to us. And I have to say that I fully appreciate their concerns and think there may be more to add on top. So what this suggests is we need to read through the reference material, we need to analyze the points raised by the non-exec, and then add more on top of that. So any point that is raised in the reference material, we need to specifically critique in our response. So with that in mind, let's take a look. And you can see this is an email from Professor Salem Hegazy, one of our senior independent directors. And let's see what they have to say. So I'm very intrigued by this project so far, but I feel the need to point out some potential problems with the analysis. Whilst I agree that net present value analysis can be a useful tool, it's widely used to evaluate investments and can give a clear answer in financial terms about whether a project is viable. But it's perhaps the best of a bad bunch. So, what can we read into from this first paragraph? What sorts of points are they trying to say? Well, of course, we can't just look at the risks and the drawbacks. We have to look at what it is used for and why it can be valuable to evaluate investments, because we're all starting to build a pros and cons to ultimately decide whether or not it is appropriate. So ultimately, one of the key takeaways from a net present value is that when something is positive, essentially it should ideally be undertaken, because it's any project that has a positive NPV is adding value to our organization. So it gives us that clear yes or no. That's one key thing that we need to look at if we are basing the decision just on whether it is positive or not, that is. It is also something that shareholders want to see. So as part of trying to get buy-in from our shareholders to undertake the project, it is something that they will want to see. They will want to see some sort of evidence, some sort of analysis, some sort of calculation that proves that they, or at least suggests that they are going to receive added value in the long term from this investment. They then go on to say that I'd be uncomfortable relying so heavily on such an analysis alone when making an investment decision. So again, that's a key point here. With the drawback of it is just a financial projection. There is no additional qualitative analysis around potential issues, around other potential synergies or anything like that. It's just a pure cut and dried, is this going to add value or not? So that's a drawback of it. It's essentially just looking at the figures and it ignores more qualitative analysis. For starters, I've seen no explanation for the cost of capital figure other than it being based on the same rate as in previous projects, which is a concern given the complexities involved in calculating that figure accurately. So this is a very good point here, and it's part of one of the biggest fundamental issues with these sorts of analysis. And there are a few points that we can raise from it for different figures, but ultimately it's that of estimations and projections. It's just an estimate. We cannot absolutely categorically, empirically state that these are going to be the figures. We can look at the existing analysis of the company, we can look at their financial statements, etc. We can look at what we think, and we can do our best to conduct an accurate assessment, but ultimately it's still a projection. And this is the same for the cost of capital. The cost of capital is just a figure that we've decided to allocate based on the risk. But of course, this is a higher risk project, as we discussed in the first question. So the biggest problem with the cost of capital is A, that it is just an assessment, and B, that it is maybe not appropriate for this project because of the additional risk factors involved. There's also an issue, and going back to this point here about qualitative review, is that is just simply using a percentage discount on your cash flows really assessing all the risks involved. Even if you say, well, as it's higher risk, we'll use a higher discount factor. But is that in itself mitigating the risk? That's not making the risks go away. That's just speculating that you're discounting your cash flows at a higher rate just to take into account that risk, rather than any real assessment of the risks themselves and what they could mean. I mean, these risks could be so significant that it completely causes the project to collapse. So the fact that you just discounted at a slightly higher percentage isn't necessarily going to help here. Again, going back to this idea of a more thorough, comprehensive review rather than just looking at figures, which, to be fair, we did in the first question. But this question is more about to the extent to which you can rely on the financials when you are making an investment evaluation. Similarly, many of the other figures are presumably estimates. What are they calculated on, and what are the underlying assumptions being made? Again, we are just speculating. We're speculating that it's going to cost $800 million. We are speculating that it's going to, over its lifetime, generate a total value of $780 million. We've also got a copy of the figures given to us in this analysis. And again, we are assuming that we're going to make $880 million in the first year. We're assuming that by year 3, that's going to have grown to $1.32 billion in the third year. We are assuming these expenses as well. So total expenses, when you think of the cost of sales, you think of everything else that's involved. You're thinking also about the revenues as well, not necessarily thinking about the potential savings that would be made. Is this revenue implying some sort of intercompany transfer, or is this revenues that we are selling to other companies surplus once we've already used the battery, the lithium that we need for our own operations? So again, these kind of statistics, these numbers, are we assuming these? What are these based on? Why is it going to drop to 80? Why is cost going to drop to 83% in the year 4 onwards, where it's 85% in the first few years? So again, all of this is just an estimate. And that also comes to the core of the problems with perhaps a net present value analysis, is that you are making lots of assumptions. You're assuming the revenue, you are assuming the cost, you are assuming the length as well. We're assuming that we're just gonna keep on this project forever until it's completely discounted to a zero value. Also, what we are also looking at here is a total net present value once that year 4 to infinity has taken place. If we just use those first 3 years, that's a huge loss. It's a negative present value. So when does it actually start to add value to us? Are we just assuming that if it lasts forever, it will eventually pay off? we need to know perhaps when it is going to start adding value, not just taking value from us. So quite a few key points about assumptions and estimates that we can bring up in our answer there. I will just return to the email from the non-executive director, because there is also another point here about comparability. That's another important factor. We have to remember that in the real world, you have to ration your capital. You don't just have all this money to invest all the time on any single project. The idea that any positive NPV should be undertaken is nonsense, because you don't have unlimited funds available. And it's easy to fall into the trap of thinking bigger is better, which is simply not the case. Agreed. Because you see here, this project, it has a net present value of $780 million, but it's going to cost us, just in capital investments, $2.4 billion. But what if there was a project that had a net present value of $500 million, but the investment was $1 billion? Well, yes, the actual value added for that project is less, but it costs a lot less in capital investment. In fact, the percentage rate of capital investment to the present value that is returned is far higher. So one might argue that that is a better project to undertake, because it has a higher rate of return, even if the actual total return isn't there, particularly when we consider how risky the project is. And you may also factor in, well, diversification. That's a key issue in the exam. That's a key issue for any business, is diversification. If you put all your eggs in one basket, then that's a problem. If instead of investing in this one project for $2.4 billion, we invest in 3 projects for $800 million each, and the total net present value is roughly the same, is that the safer option? Because then if 2 of those projects pay off and 1 doesn't, we're still up. Whereas we're relying on this one project paying off in order to get a return on our investment.
So there we have it, 5 key videos to get you started with your exam preparation. I hope you found them useful, but the reality is that this is just the starting point, and you'll need to do a lot more preparation over the next few weeks to improve your chances of passing this tricky exam. And to that end, we have a number of options available. The video clips you've just seen are taken from our course content. And our courses are designed to help you ultimately pass the exam. We want to minimize your study time. And of course, we want to ensure that you're getting your value for your money. So if you want more of what you saw today, you want to check out our full pre-scene analysis pack. And that basically includes the full videos from which those clips were taken, from the pre-scene analysis videos through to the top 10 analysis, the strategic analysis, industry analysis, and in addition to that, we've also got 30 pre-scene questions that are designed to help you consolidate your knowledge and understanding of the pre-scene company. Pre-scene analysis is a crucial first step, but passing the exam requires developing your exam technique and lots of practice. So the best all-round comprehensive solution is the Astranti Premium course. On that, in addition to everything you get in the pre-scene analysis pack, you'll also get 5 mock exams. And those mock exams are written according to the pre-scene company. They're not generic and they don't have generic solutions. They're applied to the pre-scene and they're based on the top 10 issues. So you'll get questions in the mock exam that they'll have a good chance of coming up in the real exam. In addition to those mock exams, you can get mock marking and feedback. And this is where you'll submit a mock exam to your dedicated marker and they will mark that and give you a fully annotated script with feedback and annotations. And they also provide a 9-page document with feedback that you can apply in your next mock. In addition to that, we've got our exam technique video series. Exam technique is really important in this exam. And so our exam technique video series has 13 chapter study texts and accompanying videos taking you through every aspect of exam technique, right from understanding the exam through to interpreting the requirements, answer planning, writing technique, and time management. Really valuable course that will help you a lot developing those soft skills that you need to do well in this exam. Alongside that, we have 3 live masterclasses that run throughout the course, from the first one that's looking at the pre-scene through to later ones that look more at exam technique and theory revision to help you get ready. Included in the premium, you get access to tutor and mentor support, and you'll be able to access our discussion hub where you can post your questions and talk with other students and tutors about any questions and queries you may have. And our premium course comes with our double pass guarantee, and that's exclusive to premium course students. It's a double guarantee because if you don't pass, if you take this course and you don't pass the exam, we'll give it you again for free with no extra charge. And you also have a 14-day money-back guarantee. So if after 14 days on the course you're not happy, you can get a refund, no questions asked. So whatever your situation, we believe we have the solution for you at Astranti, and you can find out more at astranti.com/CIMA. Thanks for watching.